Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Indian equities end higher on the back of strong foreign inflows, firm global cues and continued support from the India-US interim trade deal. Frontline indices gain for the third session in a row. The rupee strengthens against the dollar, making it one of the best performing currencies in Asia today. Combined inflows into gold and silver exchange-traded funds crossed 33,000 crore rupees in January. Gold ETF inflows up 106%. In a month, exceeding flows into equity funds for the first time. Multi-asset and hybrid mutual funds record cumulative inflows of over 13,000 crores, highlighting investors' increasing pivot towards diversification to hedge against equity volatility. The United States decides to reduce Bangladesh's tariffs to 19% from 20% earlier. This after an agreement also commit to allow duty-free entry to specific textile and apparel goods made from the U.S., produced cotton and man-made fiber textile inputs. Bangladesh vows to provide preferential market access to U.S. agri-goods, dairy and poultry. A White House fact sheet reiterates that President Trump slashed India's tariffs to 25% after Delhi committed to stop purchasing Russian oil. Also adds that India has agreed to scrap its digital services taxes to negotiate a bilateral digital trade rule. The Indian government is yet to formally respond to the claims. Google parent Alphabet raises $20 billion in its biggest ever US dollar bond sale as it looks for funds for its AI build-out. This after racking up an order book worth $100 billion. This is the first time a tech company has tapped into the US debt market to raise funds since the dot-com frenzy of the late 90s. 118 opposition MPs from parties including the Congress, DMK and Samajwadi Party submitted no confidence motion against Lok Sabha Speaker Om Birla, accused him of behaving in a blatantly partisan manner when conducting the business of the House and of consistently preventing opposition MPs from raising public interest issues. TMC stopped short of supporting the motion. Well, let's start with the day's market action. The Lal Street closing largely higher. This for the third straight session, with the Nifty ending above the 25,900 mark. So that's the Nifty closing flat, 200-point gain on the Sensex. The Nifty Bank just about in the red and 0.5% higher there for the Nifty mid-cap. So that's the picture as far as our markets were concerned at close. Nigel is standing by to wrap up the day's market action for us. Nigel, the bull's still in play.
Well, a day of consolidation with a positive bias for the bulls. The Nifty ended higher with a gain of close to around 50 points, but the Nifty Bank, that's been the one that's been doing the heavy lifting. In today's trading session, it took a bit of a pause. It was a relative underperformer in trade. But the mid-cap index, that's the one that's getting its rhythm back. And the number of stocks advancing, well, they outweigh the number of stocks declining. And that's why your portfolio will be feeling very, very good. From the Nifty pack itself, Eternal, that saw a one-way correction from around 370 all the way to around 250. That, in fact, got its rhythm back. That stock, in fact, ended higher. One of the top gainers, Tata Steel, saw some follow-through buying on hopes of a better showing in Q4. And ONGC as well did pop up in trade because overnight you had Brent crude prices that did move up. So ONGC moved in line with that. On the losing end from the Nifty, Bajaj Finance as well as HCL Tech, both of them did see some profit taking. But the good news this time around is that the markets move on earnings, right? And there have been earnings from the broader markets that actually have been good. BSE, the markets appreciated those numbers. Amber, numbers and commentary was good. The street liked it. Samadana Motherson as well ended higher in trade. And Lumax Industries, you couldn't buy it after some time during the trading session because that one went up close to around 20%. So good numbers were being appreciated. On the flip side, any negative news? Well, the stocks were getting sold into. And a couple of pharma names did come in for selling. You had Oro Pharma as well as Zydus. Both of them took a bit of a knock in trade. But net-net, it appears the trend is up for the Indian markets. Broader markets possibly could outperform from here on after the stark underperformance that we've seen. Flows as well have turned positive, and the dollar index, remember, has been weakish. Well, we could be bracing for India outperforming in 2026 after underperforming in 2025. At least going by the last week's action, you'll want to believe that India outperforms from here on.
All right, we'll have to wait to see if this outperformance is temporary or more sustainable. Nigel, many thanks for joining us. And staying with the equity markets, net inflows into gold ETFs surging 106% in January, surpassing inflows into equities for the first time. In fact, the combined inflows into gold and silver exchange-traded funds crossed 33,000 crore rupees last month. Investments in equity mutual funds fell 14%, while multi-asset and hybrid mutual funds have recorded cumulative inflows of over 13,000 crores. Vinny standing by to take us through those numbers. Big surge in gold ETFs, Vinny.
Hi, absolutely. So what we're seeing is that the gold ETFs, that's what's glittering, that's what's shining in the AMFI data, mutual fund data for the month of January. 24,000 crores is the inflow approximately for gold ETFs. To be precise, 24,039 crores. And versus December, which was at around 11,600 crores, that's a massive 106% uptick on a month-on-month basis. So gold, that was good. Silver, that comes in as well. That has also come in as an inflow of around 9,400 crores in the month of Jan. So clearly seems like investors wanted to participate in the gold and silver up move that we've seen in the last few months, and that increase coming in there, moving more towards safe haven also, given the geopolitical tensions that are going on, and seems like that's the participation that's seeing increase. Now, equity inflows, obviously, that is a bit under pressure. That is down 14% on a month-on-month basis. That came in at 24,000 crores. So if you look at it, the gold ETF number and the silver, the equity inflow number, both are at 24,000 crores, and this is the first time ever that we're seeing this number at the similar levels. Mid-cap funds, that's not done well this time. On a month-on-month basis, you're seeing a decrease coming in for mid-cap funds. They are at the lowest level since June 2025, while the small-cap fund inflows also have seen a reduction on a month-on-month basis, lowest levels that we've seen here since July 2024. So seems like this time the trend was mainly more towards multi-asset allocation funds, as well as in terms of hybrid funds and gold ETFs. Those stood out, while in terms of the equity inflows, mid, small cap, that was a bit muted. Large cap continued to be stable, so no complaining on that front.
All right, Winnie, many thanks for joining us. Let's talk about the rupee. It strengthened today, making it one of the best performing currencies among emerging markets. Dealers said the RBI may have sold dollars with the intention of providing some stability to reassure FPIs. Latha joins us now with more. Latha, 90.57, the dollar rupee, RBI intervention again today?
Well, actually, the rupee kept crawling higher and higher, and largely on its own strength. This totally amounted to about a 0.25% gain at several points in the day, making it the best performing currency compared to any other Asian or emerging market currency, which is, very big compared to what it has been over the past year. It has been the worst performing currency among Asians and among EMs. It ended the day 0.2% higher, but remained a 0.25% for a better part of the day. Now, where did the Reserve Bank come in? Early morning trades, the dealers said, played like the old trades. Commodities were doing very well. It was a risk on overnight. And for all the past year, it was rupee short, commodity currency long. And many speculators played that trade again in the morning. And that was when it appeared that the Reserve Bank came in and offered dollars. So it may have wanted to provide some stability because that old short rupee trade was playing. We don't know. That was the market chatter. The FPIs are not complete converts. For the last 4-5 days, they have been buyers when you look at the final numbers. Some days it is a couple of $1 million of net purchases. Some days it is like $200 million of net purchases. Dealers tell us that the selling has stopped. Selling equities, buying dollars and taking them home, that trade has stopped. Have they started coming in and supplying their dollars, taking rupees to buy shares? That's not that much in evidence, according to the traders. Similar skepticism by the exporters as well. They're not actually selling their dollars just yet, because the expectation always is, will I get 91, will I get 92? The expectation in the market is that once the dollar cheapens below 90 rupees, then perhaps exporters will panic and sell. So at the moment, it's a slow crawling rise of the rupee. But that's, we can take it with both hands after what we saw over the last 13 months.
Well, yes, the slow crawl we will take. Latha, many thanks for joining us. Now, the Trump administration has reduced tariffs on Bangladesh's imports from 20% to 19% after both nations reached an agreement last evening. Now, as part of the deal, the U.S. is committed to allow zero duty access for certain garments, but if they're made using American-produced cotton and man-made fiber. That's not all. Dhaka will also provide preferential market access to U.S.'s industrial and agricultural goods, including chemicals, medical devices and auto parts. Also, they've opened up their market for dairy products, beef and poultry. Several Indian textile stocks remained under pressure today after this deal was announced. Traditionally, India has been the largest supplier of cotton and yarn to Bangladesh. In fact, India accounted for 46% of India's cotton yarn exports in 2024. Speaking to CNBC-TV18, the apparel solutions company Pearl Global ruled out any imminent concerns for India. Take a look.
Bangladesh was always more competitive than India because of the whole ecosystem, and the price of the product that we get out of Bangladesh has been much more competitive compared to India. Now, this kind of deal will make it incrementally more competitive. I don't see it's a massive change.
A reciprocal tariff deal has cut US tariffs on Bangladesh's exports to 19%, slightly above 18% which have been levied on India. Zero reciprocal tariffs would be charged on certain Bangladeshi textile and apparel goods produced with US cotton and man-made fiber. And the details of these are yet to come out in the public domain. Now, exporters fear India's newly gained tariff advantage in the US market will be nullified with this development. However, several details of exemptions for Bangladesh still remain unclear and yet to come out in the public domain. Clarity is awaited on Bangladesh's textile or apparel categories which will qualify for zero tariffs, on which any further details would bring more clarity on the issue. Bangladesh's use of US origin textile inputs may also raise costs for its exporters in the American market. It remains to be seen how things are going to pan out in the next few days, even as the US remains India's largest export destination for textiles, accounting for nearly $10.5 billion in exports.
All right, Abhimanyu, many thanks for joining us. And speaking of tariffs, US-based subsidiaries of Chinese EV maker BYD have sued the Trump administration over the tariffs that have been imposed. The company is requesting a refund of all those levies since they have paid since April last year. According to a Reuters report, the lawsuit has challenged President Trump's use of the International Emergency Economic Powers Act to impose border taxes. The EV giant has said that it had to file an independent complaint to ensure its ability to be refunded is protected. Remember, this matter is already in the US Supreme Court, but BYD now moving this separately. The White House has released a fact sheet outlining the key terms of the interim trade agreement between US and India. Now, the fact sheet reiterates that President Trump slashed India's tariffs to 25% after Delhi committed to stop purchasing Russian oil. Russia's Foreign Minister Sergei Lavrov hit out at the US and said that the curbing of the purchase of Russian oil is coercive and incompatible with fair competition. The Indian government is yet to formally respond to the White House's fact sheet. However, Foreign Secretary Vikram Misri said yesterday that national interest will be the guiding factor for India in all of its choices. Take a look.
Of discussion around India's purchase of Russian oil. Can the MEA clarify India's position regarding purchase of Russian oil?
Our approach is to maintain multiple sources of supply and diversify them as appropriate to ensure stability. Therefore, I would say that the more diversified we are in this area, the more secure we are. Whether it is the government or indeed our business, at the end of the day, national interests will be the guiding factor for us.
The White House fact sheet also says that India has agreed to ease its digital services tax in exchange and committed to negotiate bilateral digital trade rules. Ashmit is standing by with more. Ashmit, tell us more about this tax and how it has in fact evolved over the years.
Well, as per the latest White House release, as a part of the ongoing negotiations between India and the United States, India has agreed to relax digital trade barriers and curbs against American big tech companies. Now, as per this White House release, there were two key issues that the Indian government appears to have agreed on. Number one, removal of any digital services tax. Now, bear in mind that the Indian government in 2016 had introduced a 6% equalization levy. This was a 6% levy on all earnings from Indian companies for any advertising or digital services that the American big tech companies had been providing. This, importantly, had been removed in the previous budget as of April of 2025. Another bone of contention was an equalization levy of 2% that was introduced in 2020, and this was for e-commerce companies like Amazon making sales to Indian residents. This too had been removed as of August of 2024. So that's as far as some of these digital services tax is concerned. The Indian government in principle agreeing that there will be no such digital services tax or equalization levies going forward. That's one. The other is that there appears to be consensus between both the sides to arrive at a set of rules to remove these such similar digital barriers, including removal of any customs on digital goods. Bear in mind that as of 1998, there has been a moratorium on levy of customs on any digital goods, but the Indian government's long-standing position has been is that there should be customs charged on some of these physical products which have now turned digital, whether that's music, movies, songs, software, OTT subscriptions. These are something that the Indian government had been seeking to levy a customs on. Now, however, there appears to be agreement between both the two countries that there needs to be a framework that will ensure that no such customs are levied in the future against such digital goods.
All right, Ashmit, many thanks for joining us. In a bid to fund its AI build-out, Google's parent company Alphabet has sold $20 billion in its biggest ever US dollar bond sale. As per reports, the tech giant is planning to sell a rare 100-year bond in British pounds. This will make the company the first tech company to attempt a century bond since IBM did it back in 1996. Analysts have estimated this will lead to a record-breaking year for corporate debt issuance. So all of that massive capex build-out on AI infrastructure, the bond market certainly at play. We'll head into a break, but up next, the opposition parties, including the Congress, DMK and Samajwadi Party, submitted no confidence motion against the Lok Sabha Speaker Om Birla, accused him of behaving in a blatantly partisan manner. That and more when we get back. The standoff in the Lok Sabha escalated as 118 opposition MPs from parties including the Congress, DMK and Samajwadi Party moved a no-confidence motion against Lok Sabha Speaker Om Birla. The notice seeks the Speaker's removal and was submitted to Secretary General of the Lok Sabha. The opposition alleges that the Speaker's remarks against opposition members in the House are indicative of abuse of his constitutional office. Trinamool Congress MP Abhishek Banerjee said his party would back the motion if the Speaker failed to address the opposition concerns within 2 to 3 days.
आज तो 10 है, अभी भी तो 3 दिन है. आज अगर देते हैं तो 2 दिन 3 दिन स्पीकर को समय दीजिए. अगर स्पीकर कोई एक्शन नहीं लेता है या उस पर कोई विचार नहीं करता है, then there is always a room to move no confidence.
The Supreme Court has urged the FSSAI, the food safety watchdog, to consider front-of-package warning labels on packaged food products. The apex court has flagged concerns over high levels of sugar, saturated fats and sodium. The bench observed that while companies may resist such measures, the regulator must place public health above commercial considerations. The court cautioned that if the FSSAI failed to act, judicial intervention could follow. It's also directed the regulator to file its response within 4 weeks. The Supreme Court has agreed to consider listing a plea filed against Assam's Chief Minister Hemanta Biswa Sarma for alleged incendiary comments. The plea flagged a social media post shared on the official X handle of Assam's BJP that allegedly targeted a particular community. The plea filed by leaders of the CPI and the CPIM urged the court's action against the Chief Minister. Sarma said he has no knowledge of any such video. Israeli airstrikes on a building in Gaza City killed 4 Palestinians. Israeli attacks have killed more than 580 people since the ceasefire deal took effect in October. This comes as Israel's security cabinet approved property law and licensing measures to increase Israeli control over the occupied West Bank. Arab countries and the United Kingdom have said that the move amounts to de facto annexation. Russia's drone strikes on Ukraine have killed at least 4 people. Ukraine's Air Force said Russia launched its 11 ballistic missiles and 149 drones overnight. Of the drones launched, 116 were shot down or neutralized. The attacks have damaged production sites of Ukraine's state-run oil and gas company. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We'll be back in a minute with plenty more.